Well, our bet is that the long Treasury bond yield will come down. If we're right that the US is going into a harder landing than most anticipate.
Hey guys, welcome back. Now, according to Cathie Wood, all is not well in the economy. Even though we've not heard much recession talk for quite a while, she believes it's only a matter of time until one finally hits. And she believes it won't be a soft landing as most people are expecting, but a hard one. And also, recently we've had some big name bears like Grant Cardone warning of a stock market crash as big as 50%. And if you add to that the purchasing power lost due to inflation, it's up to a 75% loss. And so in this video, we'll be digging into the latest monthly update from Cathie Wood and the team at ARK Invest. We'll see why people are saying a hard landing is still coming, then why Bitcoin still could be going on a raging bull market even if stocks were to crash, and then we'll finish with the one factor which could save the day and stop the 50% decline from happening. Okay, so first up, let's take a quick look as to why the bears are back, warning of a hard landing and a potential crash in stocks. And so this is the biggest reason why Cathie Wood, the team at ARK Invest, and many bears are fretting about the global economy. And it's because in the US, the yield curve, and this being the 10-year minus the 2-year, is still inverted. So we've not heard from this for a long time because it's been inverted for such a long time. But the longer that it's inverted, history says the worse the recession and potential crash could be. And we're now at a point where in the last 100 years, this has only happened 3 times before. It was in 1929, in 1974, and in 2008. And any savvy viewers will know that in these times, we had every single time a massive stock market crash. In fact, taking the big benchmarks down by over 50%. So this is the main reason why we still have the bears piping up, saying all is not well. And one of the other factors we have are these pesky interest rates and the Fed keeping rates higher for longer. So this is a chart from Bloomberg, and it goes back to 1968, and this is how many months they kept the rates high. So going from the last rate hike to the first rate cut, and the average being about 8.4 going through the middle. So it's now gone above average, and we're now hitting these levels where what had followed is a massive crash. So obviously a huge crash happened year 2000, 2008. And this is one of the main reasons why Cathie Wood believes a hard landing is still on the cards. Now, on the flip side, there is the brand new asset class of crypto with Bitcoin leading the charge. And this chart pretty much shows why Bitcoin could be doing well even in a risk-off environment. So this is the M2 money supply from the US, and we can see the money supply is pretty much ever increasing. Doesn't matter whether there's recessions or not recessions, they keep printing money and increasing the money supply. So this is monetary debasement. This is why prices for everyday goods and services just keep going up to account for this ever increasing money supply. And it was around COVID where this massively accelerated. And most recently, we've gone through a small tightening cycle. And ARK Invest this month were pointing out that Bitcoin is the solution. So this is Bitcoin's inflation rate and the percent of the supply that's been mined. So in green, this is how much Bitcoin has been mined and is left to be mined. And you can see we're pretty much well into the 90, close to 95%, which is why in the halvings, there's really not much been given as a reward. And the inflation rate, because of this, just keeps falling. And now one of the big milestones that Bitcoin has reached due to the last halving is it's now got a lower inflation rate than gold. And the reason why more and more people are flocking to Bitcoin, whether that be retail investors, now tons of corporations, institutions, pension funds, nation states, because it's governed by code. So very hard to manipulate. And Bitcoin, it doesn't have a CEO. It doesn't have a board that needs pleasing. It isn't run by an inefficient government. There is no central website, no back office. So over time, this is why it's becoming more and more trusted. Sad to say, but it's when you take people out of the equation. Now, just flipping over and taking a look at the most recent price action from Bitcoin. And for the last couple of months, we are bouncing around this trading range of around 60 to 70. It couldn't hold above it. It couldn't hold below it. We're about a week and a half after the latest halving, and think to yourself, what do you see? Because you can look at this chart in a number of different ways. First of all, if you are also feeling bearish, then you'll probably notice that Bitcoin's just almost lost 24% of its value in a very short period of time. However, if you are bullish, then you may look at the exact same chart and see that Bitcoin has almost doubled since January. We saw January 23rd, it went on an epic move in just 2 months, gaining 93%. Now, myself being more optimistic in nature, I'm not too fussed about this most recent volatility because I know Bitcoin can go from 40 to 75 in just 2 months, meaning even if we were to drop to 60, it can get to 85,000 in a very short period of time. However, Cathie Wood and ARK Invest are also optimistic, and even if there is a recession, they believe Bitcoin will still do very, very well. And finishing up with the number one thing which has the power to stop any crash, and that is liquidity. So this time, purple line is M2, zoomed in from 2014. So this really shows the big spike that happened around COVID. Then since then, a massive tightening cycle going negative, which very, very rarely happens, and now on its way back up. And overlaid is the CPI, another one of the key performance indicators. So the CPI, as you can see, is very correlated. It's not perfect, but it is quite close. So they're basically saying that CPI very closely follows M2. M2 has come down a lot, and this is one of the main reasons why Cathie Wood and ARK Invest believe CPI is coming down a lot lower. And obviously that would be a great result for everybody. And then finally, a very optimistic chart doing the rounds on X at the minute. Again, M2, but this time it's the percent change from a year ago. So obviously growing at 5%, COVID spiked this up, and then it was inflating at 20% up to 25%. We had the tightening cycle. It went negative for quite a lot of months, but this is what it's highlighting. This chart showing finally it's gone positive very, very recently, signaling that the tightening cycle may now be over. And if liquidity is coming back, then this is massively bullish for risk assets and could be the saving grace which could stop a big crash from happening. This month, Cathie Wood has been sounding the alarm that a hard landing is still coming our way. We do still have an inverted yield curve which is breaking records for length, with the only other times in the last 100 years being 1929, 74 and 2008, and every single time stocks have gone on to crash over 50%. However, ARK Invest are also of the opinion that Bitcoin will still do very well in either a risk-on or risk-off environment, and one of its biggest benefits is its shrinking inflation rate, which is opposite to the dollar. And the saving grace which has the power to stop any crash in its tracks is liquidity, and many charts are saying that the turning point may now be upon us after months of tightening. So there you are, guys. Hope you enjoyed. So as you can see, in the macro economy, all is not well. So the rest of this year is going to get very interesting. And let me know your thoughts, opinions below. But just remember, to get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.